All right. Welcome to another market analysis for June 24th till June 28th. And let's get right into it. So, first thing I want to start off with is looking at the Forex Factory with the news and outlooks for the news. So, on Monday, we do not have any red folder news. We have FOMC speakers talking at 3 a.m. in the morning, uh, Eastern time, and 2 p.m. So that doesn't really have any effects for me on Monday. But on Tuesday, we do have CB consumer confidence is the only red folder news. That is something that I do want to watch out for. So probably I won't enter a trade right at 10. Probably enter a trade, or if I do have a setup, I'll probably wait until like 10:45 and let that that volatility spike die down a little bit. Wednesday, no red for the news. On Thursday, we do have two red for the news right at 8:30 a.m. Eastern time, and we have another red for the news at 10 a.m. Eastern time. And Friday, we do have core PCE price index at 8:30 a.m. and we do have revised UOM consumer sentiment at 10 a.m., which is a red photo news. I actually don't know anything about what these photos, what these news numbers mean. I mean, you can look into it, but I don't really base my trades off of any of the details, any of the numbers. So I'm just relying on these news as volatility. It brings in more volume, or it just allows us as day traders to find more opportunities. So we need volatility for us to make a source of income. And with that, I'm gonna get right into the charts and see our outlooks for the dollar, NQ, and ES. So to start it off, I always want to start off my analysis on my weekly outlooks on the dollar, because the dollar kind of really dictates everything in the move, dictates majority of the movements for the indices, and they trade inversely. So if the dollar is going higher, um, indices should be going lower. But as of right now, it's looking quite wonky. You'll see why. The dollar is going higher while indices are going higher as well. But so my analysis for the Dixie right now is, if you look at the weekly time frame, what can we anticipate for us to for us to do on during next week? Or are we most likely going to take out this candle's high, this weekly high, or this weekly low? Just looking based off of that, we can anticipate for prices, to do something such as we open, we might dip a little bit lower and then take out the high. So that's my weekly objective. My weekly objective is to take out this weekly high, and notice how we closed here. We closed back above a weekly BISI, and on the daily time frame, we created a daily fair value gap right here. So with that, those are the two confluences that I have for higher prices on the higher time frame, on the weekly time frame and the daily time frame. So like I said, we are anticipating for us to take out previous week's high, not next week, and for us to probably take out this high here, this swing high right here. On the 4 hour, 1 hour time frame, this is a swing high, and who knows? Maybe we get really energetic and we can take out previous month's high. But as of right now, all I'm looking at is for us to take out previous week's high, and then maybe on the lower time frame models we can have lower time frame objectives. But higher time frame objective right now for me is to take out previous week's high. If prices can respect this fair value gap, that weekly fair value gap that we closed back above, and this daily FEG. So we could do something like this, but just looking at how these three candles close right here, right there, this candle, and this candle, it formed a fair value gap pattern. And just looking based off of this, it looks like we might not even retrace back into the FEG. We might open and then come into this, this daily candle, and it might not even retrace back into this FEG and take out this previous week's high. I go more into depth about that on my fair value gap video. If you guys want to take a look at that, it'll be in my YouTube channel. But yeah, like I said, objective for dollar is to take out previous week's high, and once we take out the high, previous week's high, then I'm going to trade the lower time frame models. All right, and for NQ, on the weekly time frame, we have created a fair value gap based off this structure right here, this 1, 2, 3, this 3 candle right here. It forms a weekly fair value gap that we will likely see prices retrace back into. So we might see something like this. We open at the weekly, we might come back inside this weekly fair value gap, and we might, we could expand higher. But yeah, as of right now, all I'm targeting for this week is that weekly low. So this weekly low seems to be the draw of liquidity for this week, just based off how we close on this candle here. So taking a look at this candle right here, this candle, what can we anticipate for prices to do? Take out this candle's high, or take out this candle's low. And you'll see that the way that I trade mainly power of 3. So with that in mind, I have previous week's low being the DLO for me, being the draw of liquidity on the higher time frame. So I will go on to the lower time frames, such as the daily and the 4-hour relative to the weekly time frame, and to see any PD rays on the lower time frames that support that narrative. So like I said, our higher time frame, our weekly objective is to take out this weekly low. We come into the daily time frame. We created a daily SIBI, which is not quite big in size, but we could do something such as this, come back into this daily FEG, come and in trade, take out previous week's high, maybe fill in this imbalance right here, take out these sell side liquidity, and possibly attack, go higher. But that move higher, I would elect for us, or I'm anticipating for us to actually do something like this right here. So we open at this week, we open here, quite possibly we may not draw back into this daily FEG, but if we do, we should respect it and then attack previous week's low and then kind of consolidate here, because this is the last week of the trading month. So I'm not really anticipating too much too much action, because we already did a lot this month, and we might actually save this high right here for the next monthly candles objective. So that is all I'm thinking about right now, is for us to take out previous week's high, or sorry, previous week's low. And once we take out previous week's low, I would go onto the lower time frames to find lower time frame models, lower time frame objectives. And on the 4-hour time frame, we have this really massive FEG here, this really massive 4-hour FEG. So we could tap back into this 4-hour FEG and continue lower to attack previous week's low. And then once we take out previous week's low, then I would switch that viewing, that stance of a higher time frame objective to a lower time frame objective. Unless we get some type of move like this, we attack, we go retrace back into this 4-hour FEG, we retrace back into the previous week's low. Maybe on Monday that's what we do, and then on Tuesday we continue lower, we attack sell side, and then once we attack sell side, if we get a big displacement up, then that is when I would consider taking, looking for another higher time frame objective. But if we don't get that displacement away from that weekly FEG here, this weekly FEG, then I would like to just trade the lower time frame models after we take out previous week's low. So I'm actually going to put a plus sign next to that previous week's low, because that is my higher time frame draw of liquidity. And that is my analysis for NQ right now. So looking back on my analysis on Dixie prior to this, we are anticipating higher prices. So with the narrative that we are going lower to attack previous week's low on NQ, those align. So Dixie's going higher, indices should be going lower. So that's like, it gives me extra confidence that, hey, we will attack previous week's low. And so that is basically all I have for the dollar, or I'm sorry, for NQ. I'm going to move on to ES now. And ES, notice how ES is actually nowhere near its weekly low. It would have to retrace all the way back down into this weekly low for us to match the pace with NQ. But we are actually nowhere near that low on ES, which makes me a little bit hesitant about how seeing a really strong drop on NQ, because I'm not saying that we are gonna continue higher or anything, but I'm not saying that I'm anticipating for prices to not retrace back into this weekly FEG, but I believe that with the time left that's on this monthly candle, we might actually we might just stay stuck between or we might stay in the trading range between this daily FEG and this previous week's high. That's just my thoughts. And if we do get displacement on NQ away from the weekly FEG, and ES doesn't even trade back into this FEG here, then that will be a higher time frame SMT. So what I'm talking about is, so notice how prices are quite close to the quite close to previous week's low here on NQ, but on ES we are actually like not as close as we are relative to NQ on ES. So ES is the stronger pair, NQ appears to be the weaker pair as of right now. So if I do trade shorts, it will be on NQ, and just because I have a clear target in mind, and ES seems to be a little bit stronger. So if I wanted to trade shorts, I want to trade with the pair that's weaker, and that's going to be NQ for this stance. And my analysis on NQ, or I'm sorry, on ES is actually, I don't really have anything as of right now. We don't really have clear displacement away from this daily FEG, nor do we have displacement away from to the downside. We actually we kind of traded back inside the range, but we didn't trade back inside that range with much strength, because after we created this FEG here, we never got back into it, and we just kind of consolidated. So maybe that consolidation is prices waiting for a new week to open up. But yeah, my ES, not really looking forward to trading on ES. Mainly my trades will probably be on NQ this week. But one thing to take note is the TGIF that's occurring on ES here. So on the monthly candle, notice how prices are actually, they're within the 0.2 to 0.3 range here. That is the standard TGIF retracement. And like I said, this is the last week of the trading month. So TGIF, I don't know if ICT ever talks about TGIF on the weekly time, or I'm sorry, on the monthly time frame. Majority of his TGIFs are weekly time frames, but I've come to notice that TGIF actually applies to every single candle, but he likes using TGIFs on the higher time frames because the movement that occurs on the lower time frame compared to the higher time frame is a little bit. I mean, the prices they're the same thing, but like a weekly candle, because we have so much time on the monthly candle for prices to expand in in either direction. On the weekly candle, it won't look as large as the monthly candle. Like if you compare this monthly candle right here, this is just one monthly candle, and this is just one weekly candle. This weekly candle, just objectively looking at it, this weekly candle is smaller in size compared to the monthly candle, and that monthly candle has a larger price range. So price ICT likes trading it on the like using TGIF on the high time frame because there's more the prices how do I phrase this? You can actually capture the moves because the price range is significant enough for you to trade within. But if you did it on like a 5 minute time frame or like the 15-minute time frame TGIF, you wouldn't be able to get that retracement because the price range that time frame allows isn't as significant as compared to like the weekly time frame or the monthly time frame. I can do a whole different video just talking about TGIF, but that's just my little spiel over it. But yeah, one thing to note, just to take a look at, is the TGIF for the monthly candle range, and notice how that we are closing on the monthly candle this week. So anticipate for prices to be between that 0.2 to that 0.3 price range here. So yeah, so that is my analysis for ES, NQ, and the dollar. The next thing I do want to look at is to briefly review my past trades. I already did every single trade I took this week. I did a review individually for each trade, but I do want to just briefly touch over it just so it helps me stay disciplined and in like I don't want to get rusty per se. Like I know it's a 2-day weekend. It is a 2-day weekend, but it helps me as a trader to stay focused. So with that, let's get into. Actually, let's do a recap of what occurred, or what is my outlook. So, like I said, on Dixie, it seems like we are continuing higher. After retracing into a weekly FEG here, and what I mean by that is we retraced back into a weekly FEG here 2 weeks ago, and we expanded higher from it. We created a daily BISI, a daily fair value gap this week that prices should respect if we are to continue higher. I am anticipating for prices to take out previous week's high sometime this week based on the power of 3. Objective is to take out previous week's high. So that's my higher time frame objective, is to take out previous week's high. And on NQ, we have created a weekly BISI this past week. I do want to see us retrace back into this weekly FEG. Depending on how we trade there at or near the consequent encroachment of the weekly FEG will tell me how prices will behave for the next month. That is for the next, that sentence right here that I just stated will most likely, we'll touch up more on it next week, because after next week prices will there will be more structure to look at, and this is a very broad statement. It's just I'm just guessing of what will happen, but next week we should see clear structure if we respect that weekly FEG or not. And keep in mind that ES is nowhere near its respective weekly FEG. So like I said, NQ is near its weekly FEG. It's actually coming back to retrace into it. However, ES is nowhere near it. So we might have some sort of SMT. So yeah, like I said, so we might get some some sort of higher time frame SMT this week or next week. Objective for this week is prior week's low. After that, I will only trade lower time frame models. So when I mean by I will only trade lower time frame models, I will only trade the hourly, 4 hour PO3, the 1 hour PO3, maybe even the 15-minute PO3 if the setup allows. On ES, we also created a weekly busy, but compared to NQ, ES is nowhere near its previous week's low. This means we might not get a retrace back into the weekly FEG this week, but anything could happen. So, like I said, we might not retrace back into the weekly FEG on ES this week, but next week we could. Anything could happen, but as of right now, I would have liked to trade NQ, not ES. So I would have liked to trade NQ this week in comparison to ES, just because I have a clear draw of liquidity on the higher time frame. Keep in mind that we are in the last trading week of the monthly candle. So think of the monthly power of 3. I briefly touched over that. Just keep in mind the PO3 for every asset, the NQ, ES, and dollar. And with that kind of wraps up my market outlook for June 24th, June 28th, and the next part of this video is going to be recapping my trades this previous week from June 17th to June 29th or 21st. It will be a brief breakdown. So on Tuesday, June 18th, 2024, during the New York AM session, coming into today, I was anticipating for prices to be choppy because if you look back on your own charts, Monday we did have I wouldn't say random, but we did expanded high, like expanded extremely, bullishly, and I wasn't able to catch any of that move. So I didn't trade Monday, and then on Tuesday I anticipated for prices to be a little bit choppy just because we expanded so much on Monday. So with that in mind, I wanted to only trade the lower time frame models because higher time frame we are still making new highs, new all-time highs. So trading the lower time frame models will prevent me from being overly greedy, trying to push my luck on anything. And I understood that today was probably going to be, or not today, but on Tuesday was probably going to be a little bit more choppy. So like I said, only traded the lower time frame models. And I waited until we opened at 10 a.m. to start looking for any trades, and noticed the 30-minute candle I marked out. I based my trade off of that candle's PO3. So what I mean by that is pay attention to this candle right here, power of 3. Are we anticipating for prices to take out this candle's low or high? I'm anticipating for prices to take out this candle's low, and notice how we traded we created this big wicked candle after coming to a 30-minute FEG. So with that, we displaced, or we traded lower, away from a key level, and my key level being that 30-minute FEG. And with that in mind, now that I have an objective in mind, I have that 30-minute low, I would zoom into the 5-minute time frame to find any PD arrays that would support the idea of us taking that 30-minute low. And so we go on to the 5-minute time frame. There is a 5-minute FEG within that 30-minute candle. So when prices retraces back into that 5-minute FEG, I would take my entry, and my entry actually was at the new day opening gap. And I used the new day opening gap as like a almost like it allows me to choose which FEG is correct and what portion of the FEG should I enter in. ICT states that an FEG is stronger if there's a new day opening gap or new week opening gap aligned with it, and it's with the trade structure and trade the narrative of the trade. So like I said, we are anticipating for us to take out 30-minute lows, and we created a 5-minute fair value gap. And how there's a new day opening gap that runs through that 5-minute fair value gap. So it aligns with existing trade structure, which just makes my my trade idea even stronger. And notice how we close below this 5-minute fair value gap, this BISI. So this BISI should now turn into an inversion level. So I end up taking that trade, and it ended up being a green trade. So based on 30-minute power of threes, I would wait until the 30-minute time frame. So I waited until the 10:30 open before I took an entry, because I wanted to trade alongside the next 30-minute power of three, because I anticipated for it to be an open high-low close on that next 30-minute candle. So what I mean by that is, we created the high, and then we created a low, and then we closed. That was the type of candle I was anticipating for this next 30-minute candle to be like. Yeah, and notice how I sold above the 10 a.m. open, the 10:30 a.m. open, and the midnight open. So what I mean by that is, I marked out each open for the 10 a.m., the 10:30 a.m. and on this, you can't see on the screen right now, but I have an indicator that allows me to see the midnight opening price, and I actually sold above the midnight opening price as well. And like I said, ICT states that you want to buy below the midnight opening price, and you want to sell. Wait, did I say that right? You want to buy below the midnight opening price, and you want to sell above the midnight opening price. And I applied that. I feel like he didn't really state it. He didn't really state it at all. By like selling at the 10 o'clock open or anything like that. I have a feeling that he kind of hid that from us. But I gotcha, ICT. I gotcha. I felt like that was what he was trying to insinuate to us, because he wanted us to figure out ourselves. So I just applied that logic with basically every hourly open, and every 4-hour open, even every 15-minute open, and every 30-minute open. And it kind of really opened my eyes there, because when he says that it's fractal, that midnight open is actually fractal, because if you apply that opening, not the exact midnight price opening, but if you applied that concept of marking out that 000 price level, and then you mark out specific times, such as the 4-hour open, which is going to be at 10 a.m. or 6 a.m. or 2 p.m. Or if you mark out every hourly open, which is going to be like 7, 8, 9, 10, 11, 12, 1, 2, 3. If you mark them out, and then you orchestrate your your trade idea, your trade plan according to it, it will allow greater success. So like I said, that is the key thing that you want to that I did take away from when I took this trade, was that I did sell above the 10:30 open, the 10 o'clock open, and the New York open. So after we took out that 30-minute low, I took out, I believe it was 3 partials, which this is one of the critiques I do have for myself, is that I should have taken off 2 at the partial, move my stop loss to break even, and then take off 2 at Asia's lows. But instead I took out 3 at the partial, 1 here, and then I left only 1 runner. So it should have been 2 right here, 2 at the partial, 2 at the Asia's lows, and I left 1 runner for the standard deviation between the negative 1.5 to negative 2. I actually did, the way I aligned this standard deviation to, it aligned up, that negative 1 actually lined up perfectly with Asia's lows. And another critique I do have is that, I should have had my initial sell was actually at this -2, my full terminus, but um emotions, were all human. I wasn't able to hold my trade. I was antsy, and I didn't want to see my last partial get reversed on me. And I should have. I mean, like I said, I already took this. This is a winning trade already. As soon as I took the partial, I should have just allowed prices to come out to my terminus, but I ended up taking it at the midpoint between the -1.5 to -2, and but yeah, I think what I could have done better this trade was probably take out, really have correct contract sizing, targets. So I should have taken out 2 at the partial, like I said, instead of 3. And I should have been able to have more patience and discipline and confidence in my trade. And my terminus -2 would have gotten hit, but instead I didn't allow it to get hit. But I'm not fully hating on my trade. I was able to carry out about 90% of my trade idea, because prices did retrace back into this 5-minute FEG here, but it wasn't the right time. It wasn't at that 10:30 closure yet, so I actually didn't take this first initial entry up here. I waited until 10:30 open, and then when prices actually gave me the entry again, that's when I took my entry, and I was very confident in my trade. I let my stop loss be at that 5-minute open, so I have my stop loss right here, and prices came really close to my stop loss, and then I was very, very disciplined, and I was very very calm about it. That's one thing that I would say that I did pretty well. So on with the next trade. So Tuesday trade was a winning trade. Thursdays I actually took 2 trades. I'll do this kind of fast. So both of them were actually both of them was based off of the 15-minute power of 3. So just looking at how this 15-minute candle closed here, we created this this really big 15-minute FEG here, and prices retraces back into it, and then we traded lower. And with how this 15-minute candle closed, we could anticipate for this 15-minute low to be taken. And then I would go on to the lower time frames. I went onto the 5-minute time frame to see if there's any supporting PD arrays that that supported the idea, and there was a 5-minute FEG within this 15-minute candle that supported the idea of us taking out this 15-minute candle low. So when prices retrace back into this 5-minute FEG, we retrace back into it, and then we traded lower. So on the lower time frames, I took my entry actually right at the 130 PO3, so I was waiting at 130, and we retraced back into the 5-minute FEG, and we continued lower. So right at 130, I took my trade, and I didn't take my trade at 129, 130, 128 or 127. It was actually, I waited until 1:30 p.m. Like I said, I want to wait till candle closures, so I waited until this 15-minute candle closed to see how it trade there, and it allowed me the setup, because we didn't take out 15-minute low yet, and we retraced back before taking out the 15-minute low, and yeah, it ended up being a winner. The next trade was actually like almost 10 minutes right after that. This is my first trade on Thursday. So my second trade on Thursday was based off of this 15-minute candle power of 3 as well. So just looking at how this candle closed here, we can anticipate for us to retrace back into this range, just based off how this candle closed. So we can anticipate for prices to take out this 15-minute high here. And on the lower time frames, we have to find any supporting ideas that that are confluence with that objective in mind. So my objective is to take out 15-minute high. I should find a bullish fair value gap, or bullish order block that supports the idea. So on the 5-minute time frame, we closed above a SIBI. We created our own 5-minute BISI, our own 5-minute fair value gap, and prices retraced back inside this fair value gap before taking out the 15-minute high slash partial. So we got a disrespect of a bearish PD array. We have a creation of a bullish PD array, and when we retrace back into it, it was actually at the 145 open. So we opened at 145 and we dipped back into it. And we are trading below the 145 open and the 130 open as well. So like I said, keep in mind that 30-minute, that power of 3 in mind, buying below the open and selling above the open. So in this case, I bought below the open. So when prices dipped into this 5-minute FEG, I took the entry and then I targeted 15-minute high. Stop loss would have been moved to break even after we take out the partial. And my final TP for this trade, like I said, it's this trade is a lower time frame trade, lower time frame model. So I'm not shooting for the stars here. I'm just taking what the market gives me. So my final TP is to fill in this little 15-minute imbalance. And once we tap this final take out this high right here on the lower time frames, that's when all my trades are exited. And so that's all the trades I took this week. There was another trade on Friday that I did. I did a mark over. I did all the markups for it, but I didn't take this trade. It was just a back tested trade, so I probably won't do a recap for it because the video is gonna be a bit too long. But yeah, with that, the last session, the last section I do have for this video is I do want to ask you guys if there's any topics or any questions that you guys have for me that I can create a video over to help you guys maybe help you guys understand a concept a little bit better. And keep in mind that I am also still learning myself as well, so there might be some concepts that I can't answer for you guys, but maybe if we can get the community to grow, we can all help each other here. So shoot me some video ideas and I will do videos over them. I do want to grow this channel and hopefully create a community where all like-minded individuals could come together and talk about the markets. And I do have a Discord in my YouTube bio if you guys do want to join. I want to start it off first as a day trading community, but further ahead, looking beyond the horizons, I want to make it like a very a lifestyle, like I said, for us to be good traders, we can't just be disciplined in the markets, we have to be disciplined throughout our lives. And I'm not saying I'm gonna stray off the trading, but I do want to talk more about business, like if anybody wants to start off their own business, such as starting their own t-shirt shop, anything like that. We can have discussions over what their our goals are in life, and if we have any books that we want to recommend each other or whatever, anything like that. But with that, that's gonna be it for this weekly outlook for June 24th to June 28th, and I'll catch you guys later in the next one. All right, peace out. Bam.